50 basis points cut. Let's talk about it on Today in Mortgages. What's up, dreammakers? Welcome back to the show. We're talking about what's real, what's hype, and what you should actually be paying attention to out there in the world of mortgage and real estate news. It's Today in Mortgage. Rich, you got a gift yesterday. How do you
We
feel?
did. We did. And I was asked all morning what I expected, and I expected 25 basis points.
You know, we said it on Tuesday. I think you said it. 25 is the expectation. If we get 50, it's just gravy. And we got some gravy yesterday. But Rich, what we're talking about today is how much that gravy is actually moving the markets. And so tell us what we saw yesterday, what we expected to see, and then maybe what we actually saw.
Well, what we expected to see was the markets to be like, yes, the inflation fight is over, and now the Fed's mandate is to keep employment strong. That's what we expected. Obviously, we expected the rate markets and the stock markets to be excited about that, but we got exactly the opposites. We were like the dog that caught the car. Now what?
Now, what do we do, Rich? And, you know, you and I kind of spoke at the end of the day yesterday. It's a little bit of a different story this morning. And so let's just talk through kind of what things are going on right now. But I want to tee this up with the reference article that we have today, which is from Fox Business. It says, will the Fed's rate cut bring down mortgage rates? And so obviously with 25 expected basis point cut, we got 50. You would think that delta of an extra 25 might immediately make some market moves. It didn't yesterday. Is that right?
Yeah, because, everybody had already priced in 25 basis points, and a lot of the 50 was somewhat priced in too, but it was like that. We got what we asked for. What are we going to do with this now? Or what does it mean? What does the Fed mean when they're giving us what we wanted? Were they late to the game, in terms of cuts? Is there other data that we should be worried about that they're seeing that's why they're cutting so big as opposed to the expectations? Those were the things going through hedge fund managers' heads and traders' heads and, kind of market leaders. Those are the questions. And especially as they were dialed into every single word that Fed Chair Powell was saying in his press conference, and the market really moved with it. Right? You saw it like, it was like watching real-time gauge, because the market was going up and down. The mortgage-backed security market was going up and down as he was speaking. That's not new, though. That almost always happens. This was just a little bit different because people, when I say people, all the people behind, all the analysts that measure this stuff, they were like, okay, wait a minute. Like, we got what we hoped for. What does that mean? Because usually the Fed doesn't give us what we hope for.
That's right. Well, so if you watched it yesterday, we briefly, if you're looking at the stock market, hit an all-time high, and like the S&P 500, then it dipped down below opening at the end of the day. But this morning, things have kind of turned around. Rich, what's happening in the mortgage markets this morning?
Well, these kind of Fed fund rate changes don't directly hit the streets for mortgage rates. It takes time for that to happen, considering we already had some of it priced in. That's why we're at the lowest interest rates today that we have been in 18 months. That has kind of been priced. But right now, the mortgage-backed security market is flat, and the Dow is up 475 points. Now that we know interest rates are coming down, the focus is kind of moving to the affordability piece, to the supply and demand piece of housing. And we still have that problem, regardless of where interest rates are. So we have that problem, and that's where the focus is right now. And I just think that's why the rate market hasn't moved as much today, is because they're still like, okay, what does this mean going forward into the next 2, 3, 6 months?
Well, Rich, that's good insight. Before I ask you our final question about where you think we're going in the next several months, like you just mentioned, I want to remind everyone out there that we are part of the best network in mortgages. And if you want real-time advice and analysis from experts like Rich every day inside the network, click the Grow link below. We'll get you all the information you need to know about how to join. Hey, Rich, you mentioned we're going to keep an eye out on these markets moving forward. Obviously, with a 50 basis point cut, we're a little ahead of where we thought we might be today. Where do you think we're going to be maybe by the end of the year now that that's happened?
Well, the markets are now talking about we're going to see another 100 basis points before the end of 2024, likely 50 in November and another 50 in December. And that will definitely put a dent in interest rates. I think we're still going to be above 6% by
Hmm.
the end of the year, but by the end of 2025, maybe we're going to be below 6%. So we're moving in the right direction. That is absolutely accurate. And that's what I'm positive about. And a lot of what happens in the market has to do with confidence. And when your news cycle, when you flip on the news after work at night and you're no longer hearing how interest rates are rising and how inflation is terrible, as you start to hear interest rates are coming down and inflation is under control, you feel more confident as a consumer, as a home buyer, as somebody that's got to get a new car. So that changes the mindset. And when that happens, now the natural, choppy steps forward start to happen. And that's what I was most excited about, because we really have turned the corner. The Fed has shown that. So that's what I'm most excited about.
It's been interesting to me, Rich, as we've dug into this over the past year or so, that to see how much the market really runs on vibes, and like you're talking about, maybe there's a collective manifestation of
Yeah.
where we're at, and hopefully as the vibes improve, so does the market. So we'll see.
No, we will see it. And it's real. This is real. If people feel like they're hearing things are better, you start thinking differently.
Mm.
Things start to feel better. If all you're reading and hearing about is news, like if you take out just the political news that's happening, which is dominating the airwaves right now, if you take that out and you just hear about, some of the financial news and economic news, it actually is looking up and positive, and it's a bright future ahead. But its problem is we're in electoral season and everything is just getting, it's just a lot of noise. So you really have to focus on the positive economic outlook. What's happening with jobs, even though they're down, they're still growing. Even this morning, the jobless claims came in less than expected. So that means less people are asking for unemployment. So this is good stuff.
Yeah, and if there's any indicator of tech stocks rising this morning, you can bet there's going to be investment in those areas, just like there was before, meaning more jobs. So it's going to be interesting. So really, all good indicators all around. The vibes are coming. We're excited about that. Rich, thanks so much for making us smart on this. Any final word that you have on this subject?
Yeah, this is the time to get requalified with your mortgage advisor. Hopefully, it's a network funding loan officer. It's a time to reach out for a possible refinance. But more importantly, there's a lot of equity out there and $1.1 trillion in revolving debt. Use your equity as your friend. Even though you might step up in a mortgage interest rate, you're stepping way down in interest and likely going to save a lot of money. So I would be open to those options right now.
Well, thanks so much for talking through the nuances of this rate cut, what's going to happen in the future. We appreciate you. And we also appreciate everyone out there watching, listening, wherever you are. We'll see you next time on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.